afternoon, traders. How are y'all doing today? Hope you're having a fantastic day. I did the OVTLYR live, actual live this morning, and man, I was so irritated by my microphone. Since you and I have spoken, I've already ordered a new microphone arm, a new microphone. The arm is here. The microphone will be here tomorrow. Yeah, I was so irritated. But either way, so you'll see the microphone here today. It should sound a little better already, but it'll sound even more better tomorrow. So hope y'all are having a fantastic Monday. Let's take a look. I think Sebastian was here already. Good afternoon, Sebastian. Glad you made it, my friend. The market, this is my opinion. Totally my opinion. Oh, I need to add it to the screen just a second. Just my opinion. I could be 1,000% wrong. This may be the top. I'm not calling it because I could be completely wrong, but I am saying I feel like this is the reversal candle. Now, why do I say that? Anytime you see a candle that like punches up like that, has this giant wick on top, and then turns around, starts heading south, and turns into a red candle below the high of yesterday, that could definitely be a reversal candle. Leonid, how you doing? Glad you're here. So I'm not calling top, but as you know, I haven't been trading for a while. I think we are in a FOMO market right now, and I'm sitting on the sidelines waiting in cash for proper setups as long as it takes. So because of that, I am going to hang out the next couple days and a few weeks or so, as long as it takes, until I get the signals I see. Jean-Louis, good to see you, my friend. Yeah, you're right. Breath woke up today, finally. We'll see if it holds, right? We'll definitely see. We want to see the 10 over 20, price over the 50 on the market breadth, but it definitely came back today. Totally 100% right. We do have the 10 over 20, price over the 50. Hang on. Jean-Louis, you made me skip my button here. Let me hit the bumper. We do things by the book around here, all right? I have an educational, informational show to put on for you. Welcome to the OVTLYR Trading Room. This is how to trade in only 10 minutes a day and exactly how to take the guesswork out of trading. Now, I always like to say this is my style of trading using OVTLYR, and I am a partner with OVTLYR, so I like to share this is my style of trading, but you can use it any way you please, and there are new opportunities every single day. So I want to see the 10 over the 20, price over the 50 on the breadth and the market price, which we got the 10 over 20, price over the 50. We've had it for a while. And then on the market breadth, we have the 10 under the 20, price under the 50. And it is, that is a bearish setup to me. So I have a bearish setup on market breadth, and I have a bullish setup on market trend because I trade from a top-down approach. I have no confluence there. Nathan knows. He's upset. He missed yesterday's live. I noticed, Nathan. That's okay. But we're glad to have you here today. So I'm not going to be trading anything today because I don't have a confluence of breadth and trend together. On a day like that, for me and my style of trading, that makes a transition day. I'm not in the market. I'm waiting for valid market setups, as you guys know. So you got to show up every day, right? One of the things that I learned from the market wizards is you need to have consistency and discipline. I don't have it with me. One of my all-time favorite trading books is called The Complete Turtle Trader. I would highly recommend grabbing a copy of that. In there, it's Richard Dennis, who was one of the market wizards. He talks about how even if there's no trades, there may be no trades for weeks that set up for you, but you at least have to show up. You have to be consistent. You got to just show up every day and at least look. Because he gives the story of when the silver trade happened in the 80s, right? I'm too young for that. But when the silver trade happened in the 80s, when the Cook brothers, so I'm too young for that, but I love finance, right? This is my jam. I don't care about sports. I give no shits who won the Super Bowl yesterday. I heard Taylor Swift won the Super Bowl. That's all I know. So finance is my thing. Either way, when the Cook brothers cornered the silver market in the 80s, Richard Dennis was entertaining family members from out of town. And he said that that was his worst trade he ever made, was having those family members come in because he wasn't paying attention. He did not take his signal, and it would have been the greatest trade he had ever seen ever. And granted, you can't like be stuck in front of a screen every day. You have to make the decision, you know, how much can you commit to it, right? With consistency and discipline. And that's why I don't sit in front of the screen all day, every day. 2:15 Central Time. That's when I get on. I'm taking a look. And if anything lights up, I'm going for it. If not, I'm out. So like this Friday, I'm out. I'm going on vacation with my kids for the weekend. Monday is a holiday. So there's not going to be any trading rooms. There won't be any trades. OVTLYR may even actually push some through. I have seen that in the past. I don't know if it will. But Monday, there's not going to be anything. We're going up to Arkansas. We have a lake house in Arkansas that we're going to go hang out for the weekend because Monday's my birthday and I'm taking it off. And it's also President's Day. I'll be 38 years young. Either way. Let's take a look at a question. Jean-Louis, I assume. Is this you, my friend? Are you Bluefin Trader? Let me know. Okay, so Jean-Louis said he wanted to express his gratitude for the daily trading insights. Well, you are welcome, my friend. Sometimes the best trade is not to trade at all. It's a concept I've struggled with for years, and the perspective of that has been enlightening. He's got a question regarding option trading strategies. Buying an option in the money. I understand the rationale behind it, such as higher premium and reduced chance of expiring worthless. However, I've noticed often the option just below the in-the-money strike price is significantly more affordable, albeit at a slightly lower delta. Is this a deliberate tactic employed by market makers to steer traders toward the wrong option level? And ultimately, does this significantly matter if the stock continues in the direction we anticipate? Okay, Jean-Louis, or Bluefin Trader at least, I really appreciate that question. Give me just a second. I'm going to log in to Tastyworks. We're going to jump onto a couple option chains and chat about it. First, I don't believe in the days. I do in politics, but in as far as the market goes, I don't believe in the days, right? The market makers looking to steal your money. That doesn't mean I'm wrong. It just means that's not how I consider trading. I always look at it as if there is somebody on the other side trying to steal my money, I'm gonna do my very damn best to make sure they don't. So that's the way I look at it. Let's jump into the SPY. And it really doesn't matter which strike. So we're going to go, which expiration. So we're going to go March 15th. I generally like 21 days. We don't have a 21 day on the monthlies. So I'm going to pick this one. 4 days is too short for me anyway. So March 15th. I generally like the 80-ish delta. In fact, that's in my notes here. It's usually around the 80 delta. Where is that? Usually around the 80 delta is where I get in. And when we look at the SPY, you can see the liquidity is awesome everywhere. So I think Jean-Louis' question about the liquidity standards really want to apply to this one. Let's go to a different one real quick. Let's pop open AEO, Algin. I don't know anything about these. Okay, so AEO has a negative 5.87%, so I'd skip this one. Algin, negative 17%. I'd skip that one. Go to the next one. Next two. Axon, 331.41%. That's what I'm interested in. All right, let's take a look at Axon. AXON. All right, this could be a good one. So generally, like I say, the 80 delta, I mean, this is really, really wide, 30.90 to 32.30. I don't like anything over $10 anyway. So let's go to what his question was, which was one that's slightly out of the money. So like the 270 strike versus the 240 strike, right? We're going to take a look at those two. So first thing to notice here, Jean-Louis, is the delta. Now, do please, if you haven't already, download the secret investing book in here. Go download that if you don't mind, or it's on Amazon now. I need to put a link in here. Make sure you get the second edition. That's why I mentioned it, because I do cover all the Greeks and everything in there. But what does this mean? So a 78 delta versus a 48 delta. Yes, it is tremendously more expensive. It's like 1/3 of the price, right? But 100% of this, every single penny of this is extrinsic value. Okay. However, we have a very small amount of extrinsic value. Where's it at? Here. So percentage-wise, 100% of this option at 270, the 270 strike, 100% of that is extrinsic. On the 240, 523 divided by 32, 16%. Extrinsic value goes to zero every single time. So you're starting off on the back foot already. You're already saying, my option is worthless. It will go to zero. However, it must move in my direction, right? Let's say I want to hold this all the way to expiration and it doesn't actually do anything. We don't trade that way, but let's say you did, right? I would end up still having 84% of my option. You would have nothing. I'm not saying you would, but I'm saying that is the big reason why I do this, right? Because the last thing I want to do, the very last thing I want to do is be on the back foot. Time decay always happens. And if you're 100% time decay, where I'm 16% time decay, the factor of how much your option will change on a daily basis is, 5 times greater than what mine will be. That's one reason I don't do it. Another reason is the delta, right? If I'm paying for this option at $32, that means I can buy, basically in a nutshell, 80 shares, because that's the delta, times $32. I can buy $256,000 worth of shares for $3 or $3,200. Let me explain the math behind that again. If I have an 80 delta and each option contract is worth 100 shares, so 80 times where did I get 3,200? Oh, 32 right there. In fact, I think I did that wrong. 80 times current price. Where's current price? 265. Yeah, I did that wrong. 80 times 265. $21,000. That's what I meant. $21,000 of stock. 80 times the current price, 265. But I can get it for $32.10 per share. So consider that, right? Imagine you're looking at this and you're saying, I can get a $240 stock, right? We're just going to use the round numbers here. I can get a $240 stock for $31.90 each. That's pretty sick. In fact, what kind of discount would that be? So let's round it up to 32 divided by 240. So that's 1 minus 0.13. It's an 87% discount. That's how I look at trading. Now, I didn't come up with this. Larry Hite taught me this. Larry Hite is one of the original market wizards. I had the amazing opportunity to work directly with him. He taught me this. I was like, wow, this is cool. You can get shitloads of leverage, so much leverage. And you can really, really work the way an option is supposed to work. Because if you're buying something way out here, you're hoping and praying that it moves for you. But if it doesn't do anything right here, yeah, I'm going to be out, but I'm only going to be out a small bit. And if it works, I just got an 87% discount on every stock that I buy. So that's my rationale as to why I trade that way. I hope that makes sense. Yeah, it's one of the coolest things I ever figured out. And once I did, I was like, dang, this is so cool. If you want to Google up the term stock replacement strategy, that in a nutshell is what it is. It's buying deep in the money calls. Stock replacement strategy. The reason being is you're eliminating as much of the extrinsic value, and you're eliminating as much extrinsic value as possible, yet being able to take on the leverage that the option provides. Nathan says, do you sell right after the 87% discount? Well, Nathan, if I sell it, I'm not going to get any sort of gain on it, right? If I sell it right after, I'm basically taking the bid-ask spread, which usually is not going to work out in your favor. But we do sell it once the movement happens, once I get an exit signal, right? So since you asked, what are my exit signals? You guys have not even had a chance to watch me trade. That's the crazy part. My exit signals are twofold. Stopping out and selling into strength. I'm only going to focus on the blue and the green. The red is when I go short. So a 10 EMA broken. What does that mean? So the 10 EMA on my chart is the blue line. If it closes below the 10 EMA, like it did on this date, I would have gotten out. Period. No matter what, full stop. If it closes a half ATR value below today's price or from the entry price, I would get out. What does that mean? So the ATR is the average true range over, in my case, 14 periods. Okay. So as of today, the average true range on the SPY is, let's call it 395. So 395 divided by 2. Let's call it $1.98. So if I got in at 500, oh, that'll be easy. 500.98 minus 198, 499 would be my exit point. So if I got in at 500.98, I would get out at 498, 499. If it turned around and went against me. Now, why half ATR? I didn't come up with that. That came from the Complete Turtle Trader. I talked about that earlier. That was Richard Dennis's methodology. Meaning, listen, this is the average range over a week. If it takes half of an average range out on you already, like, what's the reason you're even holding it? Why? Right? Yes, it sucks to take a loss, but that's also part of the game, right? You don't load up Mario and expect to go beat Bowser every single time you put on the game. No, you're going to die. It's exactly the same as this. But when you're skilled enough, you can make it all the way to get Bowser, right? You got to make those sort of analogies because people want to get into trading and think there is no losses ever. It's not possible, no matter what. Even with Outlier, right? The point with these is that, yes, the signal here returned 333.41%, which is outstanding. But some of those were losers, right? Like this one right here. October 16th, sell October 21st. That was a losing trade, followed by a really nice winning trade, right? The wins have to be bigger than the losses, period, full stop. That's the only way the math works. And then a close below the prior day's high or low. So this is my other third exit point. So imagine, well, horizontal lines. Imagine the SPY closed down here. Okay. Right. So I got in at 500.98, but if it closed below yesterday's low, that is a sign the trend is reversing. Right. That is a sign. This is a perfect example on this candle. Where's that arrow button? Here. That is a perfect example of a trend reversal candle. Now, it didn't play out. It kept on going. But it would have closed below the 10, and it was hellish below yesterday's low. Now, at what other point did we see it close below the prior day's low? None of these. Only there. That was an exit candle. And so right here, where did it close below the prior day's low? Right there. And so that would have got you out before this candle here. Now, of course, the trend continued on, but the market's been crazy strong. Let's look at a different stock. Apple. Yeah, there you go. Apple's a perfect example of this. Let me remove all annotations here. So let's say you're in Apple, right? And then you see this candle here. That candle was a close below the prior day's low. And it didn't happen at all during this huge trend. Big ass trends, the ones that you want to be on, they don't do that, right? When you see a close below the prior day's low, big trends don't do that. And you see it went sideways and then it died, right? And then it's gone sideways ever since. This was the perfect exit candle right here. Before the 10, it closed under, right? So 189, and it flirted with that a little bit, and now it's even below that point right now. That is why I have this listed as one of my criterias. Now, the other thing that I like to do is sell into strength when I get it, which is on Outlier. I have a few different things. First is 88D4B0. That's one of these green colors here. And the way that I look at it is I get this Google plugin, and I back tested this, and which is where I came up with this. And so I found when looking at these, 88 D4B0 is actually a great exit point. I don't have that on this one. Let's see a different one. Oh, wow. So much red. Let's go to NVIDIA. That's a perfect one. 88 D4B0 is what I have found for me to be a nice exit point, which is, where is it at? This shade of green right here. Right. Now, that doesn't mean you're going to catch the top, but it does get you out into strength. And that's what I'm going for. Additionally, if it goes from green back to pink, right? Imagine you're long here and you're holding it, and then it turns back to pink. Yeah, I'm out. Or if the shading goes the other direction, right? Let's say the shading's going from dark red, you bought it, everything's looking good. And then, oh, wait a minute. It's not getting darker green. It's actually getting a lighter green going to pink. That's also an exit criteria for me, right? So these are just what I use, right? And that's why I always say this is my style of trading with OVTLYR. There's so many opportunities that you can get every single day. It is amazing what OVTLYR can do for you. I'm going to skip final thoughts today. I actually got to run here in just a minute. Tomorrow, or hopefully, fingers crossed, tomorrow said I can have, tomorrow, Mahesh said that I should be able to have dev access into the upgrade. I need to ask them, what is this going to be called? Is it OVTLYR like 3.1 or whatever? I am curious of that, but we're going to be getting a lot of back testing. I've already made some spreadsheets. I'll share those spreadsheets with you so you can see what I'm working on and what I'm doing. Because you're on the inside now, right? Like now you have access to what pro traders do. So get ready. Like your lifestyle is changing now. Have a fantastic day, and I'll see you right back here tomorrow. Talk soon.